Good morning, Cape Town. Given that we've got quite a few slides, I'd like to quickly go through them. One of the key things I'd like to bring to your attention is the last 24 hours we put out our PEA scoping study, and I've got some summary results here, but the website has this and the detailed press release. That's our structure. We've got a good list of shareholders there. We've got money in the bank, and the directors there. We've got our skin in the game with cash. The board and management, as you can see, myself, Malik and Bruce up the top there. Kevin, who's a banker, Jacques McMullen, he's ex-Barrick. He's spent overlooking 27 mines with Barrick. He's retired, he's come on our board. Michaeli, corporate lawyer. Bob Schaefer, past president of PDAC. And those of you who know him know that I'm not doing him any justice by just saying that alone. Why invest in Cardinal? Well, at the moment, we've got a resource of about 4.3 million ounces indicated in one pit, 3.1 inferred. At that cut-off, we've got a significant land package, good board and management. We've got a long history in West Africa that goes back nearly 30 years, good balance sheet, and a great range of shareholders. That's where we are in the northern part of Ghana, up near the border of Burkina Faso. Our geology comes in from Burkina Faso, from the Welgemeend, that general area there. I've got a gentleman in the audience who was there from the early Yuga days as well. And as you know, southern part of Ghana is where all the mines have been built, and the confidence in Ghana and its mining code was born. We plan to be the first mine in the northern part of Ghana. We've got water, power, infrastructure's all there. Savanna, grassland, no problems. There's our geology around the area. There's the mining licence as well. There's a shear zone that runs up into Burkina Faso, that thick black line just to the left there of the yellow dots where the pit is. This is just to show you the three host rocks. And the scale, it's just over 1 kilometre long at the moment, and pinches and swells, but on average is about 350 metres wide, and daylights on surface. Just a typical cross-section through approximately the middle of the deposit, just to show you how the package dips down at 60 and how the rock units look. The footwall looks like it'll be basically in competent rock. It'll be the diorite there. The resource as of September 2017, there's your tables, 4.3 in indicated and 3.1 in inferred. Since we published that, just to bring to your attention, we modelled up a drill program which we've just completed, another 15,000 metres, and we'll be updating this resource. And the sole purpose of that drill program was to take as much inferred out of that 3.1 and drop it into indicated, so we would have a very, very solid pit with basically full of M&I. That was our target. We'll see how that plays out in the next month or two. How the resource has grown in the maiden resource by 3 different groups, and as it's grown, have assessed it. We had the maiden resource there to the left. We had RPA do one before our listing on the TSX, and it's been updated by another group in Australia, and it's just basically doubled in size, but the grade has been consistent all the way through. Low cost discovery, we're off there on the right, but the $147 price point there, that's only a 5-year time frame. Before that, all the ones off to the left, a 10-year time frame. So you can see it was a hell of a lot cheaper finding gold many years ago in the 90s and the early 2000s, but it's become very expensive of late. But we've managed to keep ours down to $6 per ounce. Resource drilling, the blue is the indicated, and there's a pit shell which basically our starter pit is mainly indicated, but we'll see what that looks like in the next couple of months when we do the resource update as well. And that widely spaced drilling off to the left there to the west, that's been infilled as well, and it should come up as indicated. That things like that were what we were targeting, bringing up the inferred into indicated. There's a long section, and our potential starter pit looks like that, and the life of mine pit looks like that, and of course it'll be updated. We hope to have a lot less yellow in the life of mine pit. One of the largest discoveries around in West Africa by size. The low strip ratio is important here. This has now been updated through our PEA. Our life of mine strip ratio is 1.2 to 1 in the press release. The consultants who were helping us out with the studies. Another pit design here with the gold distribution. As you can see, the starter pit's there. And the starter pit is variable. We haven't concluded on how many ounces we'll produce and what grade, but it looks like it might be about 1 million ounces in that starter pit at about 1.6 grams a tonne. Another gold distribution in a typical section. But what's important to note is that the geology and the gold just keeps pulling. We've got data down to about 700 metres vertical, and it's fairly consistent. We're growing our confidence. There's a starter pit in blue, the life of mine pit, and as you can see, there's some inferred that wasn't factored in underneath the pit. Our MET sample selection, oxide sample selection on the left, starter pit, there it is there in the life of mine sampling off to the right. All in all, we've put about 5,000 kilos into the lab, and the current status is 86% on that life of mine, and with further optimisation for the regrinds. We're yet to regrind to smaller than 75 micron to see what else we can get out of it, out of the recoveries. There's a conventional processing, crush, grind, float, regrind, CIL, and at the bottom there, regrind is being optimised at the moment in Perth. Simple view of the flow sheet. It's not whole of ore processing as you would see here. The float circuit is basically an ore separator. 90% of the throughput goes off into the tailings. 10% is the high-grade concentrate. It's actually a little bit less than that, but it's rounded up. And that concentrate is what will get reground and produce doré on site. So the OPEX is relatively cheap to a whole of ore. Our financials, as I mentioned earlier, there's an economic summary. That's how that looks. We came in better than what most of the analysts thought we would. There's a production scenario. We've got a range of 160 to 330,000 ounces per annum. And the strip ratio I mentioned a bit earlier, it's 1.2. We do have a choice, because we've got the 3 throughputs, we do have a choice that depending on what happens in the market at the right time, we could start off with a 4.5 million tonne plant and then bolt on another 4.5 later somewhere down the track if we so desire, or if the environment's conducive, we could go to 7 or 9. But the study's been done, and of course the PFS will demonstrate where we need to be. Guys, regional exploration, big land package, plenty more to find, and it's out there. Thank you very much.